Hello, everyone. Welcome to another Adam Live. This time we're doing it on a Tuesday. It's the summer, everyone, so thought I'd change things up. Anyways, we got a really good live video for today. How you can buy I-bonds, I-saving bonds, which I'll get into what that is, with an IRA or 401k. And I-saving bonds have actually caught the attention of a lot of retirement investors lately. Why? Because you can earn 9.62%. Y'all repeat that. An I-bond will return 9.62%. So if you take into account how the stock market is, crypto market is, you can understand why there are a lot of interest in using funds to purchase I-bonds. So I-bonds come directly from the Treasury. Okay, you can buy I-bonds electronically or by paper, generally electronically, using Treasury Direct. Google it. It's a website run by the federal government. I-bonds are essentially a type of savings bonds, type of security that earns a lot of interest. And the interest is a fixed rate, but it's adjusted twice a year. Okay, and it's a 30-year bond, but you can cash out whenever you want. The downside is you're really capped at $10,000 or an additional $5,000 if you're able to use your refund. But in a retirement account context, you're really limited to $10,000 per person. So not $1 million, not $100,000, $10,000, but better than nothing. So the question is, can an IRA or 401k buy an I-bond? And before I get into that question, just to be super clear, there is really not a lot of guidance in terms of retirement accounts owning I-bonds. I've actually contacted Treasury Direct by email and asked, and one of the individuals wrote back that they weren't aware that you can buy I-bonds with an IRA. And I asked specifically about a Roth IRA. And they sent me back to the eligibility requirements, which doesn't designate if a Roth or an IRA or a 401k can purchase I-bonds. All it says is individuals, and then it lists types of corporations like LLCs, corps, even trusts. So there's nothing that says a retirement account cannot buy an I-bond. At the same time, there's nothing that says a retirement account can buy an I-bond. But I've had many clients write to me and say, hey, I've used my IRA LLC or my solo 401k to buy I-bond. So I know you can do it. I've gone through the application myself. I haven't funded the I-bond, but I know you can do it because I've been accepted. So how do you do it? Okay, so I suggest, and I'll put this link in the chat, that you go to treasurydirect.gov and you can see for yourself how you can apply for an I-bond. Okay, remember you're capped at that $10,000. But before I go through the actual application, let me just kind of summarize everything. So the advantage, again, of an I-bond is you get a very high interest rate, 9.62%, which is adjusted twice every year. As interest rates go up, that amount will up as well. There is tax when you pull the money out. It's a 30-year bond, but you can pull it out whenever you want. Who can own I-bonds? Generally, U.S. citizens, U.S. residents, and employees of the U.S., no matter where you live. Okay. For children under 18, you have to have a designated custodian, adult custodian, purchase I-bonds for the child. But again, there's nothing that says retirement accounts cannot purchase I-bonds. At the same time, there's nothing that specifically says a retirement account can purchase an I-bond. But if you go through the application, you're going to see there's ways that you could apply using a retirement account. So let's start with just an IRA you're going to open at IRA Financial or Fidelity or Schwab. In that case, it's going to be quite difficult to open an I-bond in the name of the IRA. Why? Because an IRA is not an individual, but technically it is a trust. The problem is if you collect trust, you're going to have to include the words IRA, right, into the title, which could trigger something by Treasury and say, hey, you can't do this. Or they may come back and say, this isn't a typical trust like the John Smith Trust, where the John Smith is the trustee for the John Smith Trust. So doing a custodian controlled self-directed IRA where it's IRA Financial Trust for the benefit of the Adam Bergman IRA, difficult. I've had clients do it. The only problem is you're going to have to have get a tax ID number for the IRA, which you can certainly get on the IRS website. So you're going to click trust, okay? And at that point, you're going to have to select certain information, okay? Like who's the manager, right? So you would say the authorized person is me, is the IRA owner, okay? So if you go through, it says, okay, so you select trust and you put in IRA Financial Trust, custodian for the benefit of Adam Bergman IRA. You give your account a name. You could say Adam Bergman Trust. You get a tax ID number, which you can get on the IRS website. You enter your street address, which you can put the trust company's street address or technically yours. It says the account manager's information. It doesn't say the account owner. It says the account manager. There you'd put in Adam Bergman. You put my name. You put my social. And you put my driver's license information, okay, email, and you'd put the bank info. So this is where you put your custodian information, and that's it, bank. You certify and you click submit. I've had clients do it, and I've had a lot of other clients that got bounced when they put the IRA name in it. So I guess it all depends who's reviewing the application. But if you do a self-directed IRA LLC, so you have an IRA that wholly owns an LLC, or trust, and then that entity, that LLC or trust applies for the I-bond, that has been the more common and more successful approach for applying for an I-bond. So it's a little more difficult when the IRA is the applicant, even though it doesn't ask for the owner of the account, it simply asks for the account manager, which you would put as your own name. With an LLC, it's going to be super easy and you're not going to run into any issues with the Treasury because they're not even going to know it's owned by an IRA. Because they don't ask for the owner. They simply ask for the account manager, which will be you. So you'd put in, let's say your IRA sets up an LLC and you call it, ABC LLC. You put the information for ABC LLC in the application. The account management information would be, Adam Bergman, since it's my IRA, or I'm the manager of the LLC. That's actually more accurate. And you would submit the application. It's one page, put your bank account info for the LLC, bang. You can then fund the account. So super easy with an LLC. Same with a solo 401k. A solo 401k is technically a trust. So you'd enter the trust name, XYZ 401k plan. I've had some clients say, hey, Adam, I want to kind of do a DBA for the trust. I'm going to call it the, ABC IK trust. I'm worried that the words 401k will be in there. I've had clients do it both ways. I've had clients be successful and submit an application for an I-bond with the word 401k trust in there. And I've had other clients that have not used the word 401k and just put, the ABC Inc. IK trust or K trust, whatever you want to do in there and also be successful. I just got an email from a client today that actually said, hey, I'm looking forward to your live video today because I actually just did it for the solo 401k. So the application's super easy. Yes, you're only capped at 10K. Some people may say, well, whatever, it's not worth my time, 10K. But again, 9.6% interest, pretty good stuff. It's guaranteed by the federal government. It's a kind of the most secure, safest investment you take. And 9% interest, and almost 10% interest in this environment is really, really good. Okay. Yeah. Would it be great if they let you put $1 million in or 100,000 or 50,000? Absolutely. But it is what it is. So you can do it for each person in your family, right? If it's a father, mom, 2 kids, you can put the 10K in, whether you do it through an IRA or personal funds. It's safe, it's secure, and it's a really strong return in today's marketplace. It's very hard to find any type of investment where you're going to get 9.6% return that's safe and kind of secured by the federal government. You may be able to find it in penny stocks or some type of DeFi cryptos, but the risks are far greater than buying Treasury securities backed by the federal United States government, which is as safe as you're going to get in today's marketplace. So just to summarize, this is not going to be a long video, so don't worry. It's pretty clear. There's nothing specifically that says you cannot use a retirement account to buy I bonds. At the same time, there's nothing direct that says you could. Okay. I've had clients successfully be able to do it. I was approved. I haven't funded mine yet, but I was approved too using an IRA LLC. I've had clients do it directly through an IRA held by a custodian. The issue is if you do it through Fidelity or Schwab, they're not, it's going to be a little bit harder because they're not going to provide you the bank account info. IRA Financial, we can get you a Capital One bank account for your IRA, and you can use that bank account to fund the Treasury Direct I bond. And we can also help you get a tax ID number for your IRA so you'll be successful in applying for the I bond. If you have an IRA LLC, it's going to be a piece of cake. It's going to be super simple because you're just going to be able to provide your LLC info. Treasury Direct won't even technically know that your LLC is owned by a retirement account. Same goes for a solo 401k. It's a trust. You'll select trust. You'll be the account manager. You'll put in all your personal info, and then you'll put the name of the 401k, the trust. You should have acquired an IRA Financial. If you're a client of ours, would have acquired a tax ID number for your trust. So you're going to have that as well, and you're going to be all set. So again, just wanted to introduce this. I've got a lot of questions about I bonds. There's not a lot of information out there. The Treasury Direct website, if you go to it, and again, nothing against the federal government, but it looks like it's from 1997. It's ridiculously bad. The font is horrible. The website structure is just really, really bad, but it works. But there's just not a lot of info. If you look at the FAQs and it says who's eligible, you won't find anything about retirement accounts. However, the Treasury Direct, if you do communicate with them, if you're able to get in touch with them, they will tell you that an IRA can't hold it just because the titling. But again, if you do an IRA through a self-directed custodian, it's a little bit easier to have the application approved because we'll be able to be more flexible than a Schwab or Fidelity. And obviously, if you use an IRA LLC or a solo 401k, you're going to be able to satisfy either the LLC or the trust definition under the entity section of the application, and it's going to be a breeze to apply and be able to purchase I bonds of up to $10,000 per individual. If you do this with personal funds, you also get a $5,000 kicker if you use a refund to purchase additional I bonds. So it's a great program. I'm all for it. Yeah, I did diss the website, but I'm all in favor of the I bond program. It's really good, great returns. Just people don't know about it. I don't know why the government hasn't done a better job really marketing it, because for folks out there who want to put in, $500, $1,000, even $100, $10,000, you're not going to find a better investment in today's environment to get almost 10% secured by the U.S. government. It's a no-brainer. It is taxable, but if it goes into an IRA or 401k, clearly the interest is not taxable, right? Because retirement accounts do not pay tax. Is the intent of Treasury Direct to be open to retirement accounts? It's unclear, right? You can make the argument if it wanted retirement accounts to be eligible, it would have said it. At the same time, if it didn't, it would have clearly had an exclusion for retirement accounts, which it does not. So again, I've tried it. I've had many clients do it, and they've funded it, and it's gone smashingly well. So it's up to you. The purpose of today's live video is really to introduce it to retirement account holders. If you say, hey, you know what, I don't really want my retirement account to use it, but I got $10,000 lying around in personal money times 2 for me and my spouse, 20 grand, 2 kids, that's 40 grand, getting 9.62% interest, which could go up depending on where rates go. That's pretty good, right? You're going to be trouble to find a better rate of return. So just want to introduce it. That's really the main point of today's video. You can search around. Again, you can go on Treasury Direct. You just Google it, I bonds, Treasury Direct. You can read through the website, get some more information. If you are a client of IRA Financial and have questions, let us know. We can help you with the application. It's super simple. It is a little bit more challenging if you're doing it directly through an IRA without using an LLC or a 401k, but technically it is still possible. So that's kind of it for today's video. I wanted to keep it short. It's the summer. You guys have probably some better things to do with your time than watch me talk about I bonds. But honestly, it's a really good program, and it's a great investment opportunity to get a really good return at a very secured product. So thank you for watching. Really appreciate it. If you have comments, let me know. I try to do a YouTube live every Wednesday, but I actually have travel plans tomorrow in New York. So I did it today. That's why if you subscribe to our channel, you'll know when I go live. Next week, I hope to be on target again for a Wednesday, 12 Eastern Standard Time YouTube live. But obviously, if you miss it, you got other things going on, don't worry. You can just come back to our YouTube channel at your convenience and watch it. So check it out. Don't forget to subscribe if you haven't already, because we drop 3 podcasts and 3 to 4 videos a week, plus the YouTube live. So there's a lot of great content. If you're interested in self-directed retirement plans, solo 401ks, alternative asset investments, if you want to be on the cutting edge of tax planning, check it out. There's some good stuff. It's a fun way for me to use my tax background, my legal knowledge to help educate all of you. And I've got some great feedback. This is something I love doing. I wish I could do it every day. It's just it's kind of hard coming up with really interesting content, because from a tax standpoint, in the self-directed retirement world, rules don't change that often. It's pretty static, right? We know what we can do under the prohibited transaction rules. We know what we can't do. And things don't really change that much, but it happens, right? We saw right now with the Inflation Reduction Act, the IRA Act. I hate that word, but it was just passed the Senate. Nothing, thankfully, targeting retirement accounts, IRAs, but I'm dropping tomorrow a podcast on Adam Talks about the $80 billion going to the IRS and the 40,000 or so potential more agents going to be hired by the IRS, and what impact that will have on self-directed retirement accounts. Sneak preview unknown, right? But the IRS is clearly underfunded. If you look, they had 90,000 employees full-time in 2010. They have about 76,000 now. So, they definitely need some cash. But close to 60% of the 80 billion they're going to get over the next 10 years is going to go to enforcement. So, and it's not just going to the rich, right? There's only 700 or billionaires in the United States. So if they hire another 40 or 50,000 agents, guess who they're going after, right? You and me. So people don't realize this, but actually the highest percentage of audit category right now is people that make under $75,000. Why? Because they're going after low-hanging fruit, people that are taking advantage of the earned income credit. And unfortunately, the way it works is if you don't make a lot of money, don't have a lot of money, you're not going to have the capacity to fight the IRS. And the IRS believes for every dollar they invest in enforcement, they can collect 10. So that's why they go after the small fish. They feel like, hey, even if I get a small amount of money, the individuals that don't make a lot of money are not going to be able to fight us and hire lawyers and accountants. So they're just going to cave and give us the money. Whereas people with higher net worths may be a little more sophisticated and have the capacity to go out and hire accountants and lawyers and fight this stuff. And the IRS doesn't really like to do that. They want to have slam dunk audits so they don't have to waste time and energy collecting money. So we'll see. If you want to obviously learn more, definitely check out my podcast tomorrow. You could check it out anywhere you pick up podcasts, Spotify, Apple, Adam Talks, or SoundCloud, or you can check it out right here, YouTube channel where we post it. So hope you guys have a great rest of your day. Thanks for spending some time with me today, and take care.